Hello, guys. Welcome to Wealth FX, and I am your host, Mr. Babs, and this is Trading Made Easy. Are you a beginner trader, advanced trader, seasoned trader, and you notice you are struggling with being consistent with profits? I'm going to be showing you something really quickly in this video that has helped improve my trading performance and results over a very short period of time. And what I'm going to be talking about today is what I call the concept of momentum. Now, what is momentum? Simply put, momentum is like a driving force or an extra push behind a particular concept. Now, in the subject of trading, we tend to pay notice or discover that while observing the candlestick chart, paying attention to the driving force behind the candlestick charts or behind the candlesticks um, can really give you a whole lot of extra information when trying to pick your trades or take positions. Now, without wasting too much of our time, the first aspect or part of momentum I'm going to be talking about today is candlesticks. And of course, the combination of multiple candlesticks makes up our chart. Now, if you are familiar with the trading space or with the trading chart, you know that for every candlestick, they are significant or relative to the time frame which they occur. So what that means is, for instance, the chart you're looking at is a daily chart, and this tells me that every candlestick on this chart literally took about 24 hours to form, and yes, one day to complete its formation. Now, the beautiful thing about this information is for every candlestick chart you see on your chart, we have what we call the open, we have the close, we have the high, and we have the low. Now, the open is the price at which that candlestick opened during that time frame period, and the close is the price at which that particular candlestick closed within that time frame period. The high is the highest price at which that candlesticks attained, maybe with a week or something, depending, while the low is the lowest price that a particular candlesticks got to within a certain period of time. Now, coming closer or bringing it a bit home, what this signifies is for a green candle on my chart or for a bullish candle, because this is just colors relative. Some other trading platforms, you can change it to whatever color you like. Some people use black and white, some people use blue and black. It just depends on your preference. So it means for every bullish candle on this chart, just like the one you have here, what this means is during this, at the open of this candle here, there was literally no rejection of lower prices. So all price did was go from the open to the close of that particular candle within this daily time frame. So within this 1 day period, all we could see were bullish momentums. Now, if we expand that daily time frame period, of course, markets are move in what we call fractal adjustments. That's the bigger picture you see on the higher time frame are also relative on the lower time frame. So you would continue to see a similar chart patterns or similar illustrations on the higher time frame as well as on the lower time frame. Now, for the bearish candle, what this means is from, let's say this candle for instance, what this means is from the start of the open of the candle, which was here, price tried to rally but was rejected. The higher prices were rejected, and then it ended up closing below, and this was the lowest point price got to within this formation period. Now, why you want to pay attention to this is because when you see a candlestick that has little to no wick, that's little to no rejection of prices, what this tells you is that there are more dominance of that particular candlestick in that price chart. So for instance, since this is a red candle and then I notice this long wick, that tells me that there were rejection of higher prices in this area. So the wick tells me that during this time formation period, price tried to rally up to this high but got rejected and then ended up closing below the open price. Now, when you see little to no wick like this harami candle here, of course, if you wanted to know more about my candlesticks chart analysis, you can as well go and watch our candlesticks, one of my candlestick videos, in order to get some more in-depth understanding about candlesticks. So moving on, if you were to pay attention to this bullish engulfing candle or harami, you would discover that throughout this 1 day period, price literally had no rejection of lower prices and of course no wick, which tells me that such candle signifies bullish strength, signifies increasing bullish interest, increasing bullish momentum in that chart. And now when I start to see more dominant bearish candles than the predominant bullish candles, that tells me that bias is shifting from buying to possible sell. So that means the buyers are beginning to lose power to the sellers, and the sellers are beginning to take more control of the price action chart. Now, of course, each candle signifies a time frame. So combination of candles would actually give us what we call market structure. Now, the market structure, at all times, market can only be in three phases at any particular time, in any of three phases at a particular point in time. Now the first phase is the buying phase, where you have a whole lot of bullish momentum, and this is something of what we have here. And then the next phase, which we could also observe in the market, once it moves from the bullish phase where it is progressing, you tend to notice a period of ranging. Now that means you notice price just remains between a particular high and a particular low, not particularly breaking out of the resistance and not exactly breaking below the support. Now what this tells me is that there is indecision in the market. Maybe people who have been long in this particular market are deciding to sell or taking profits, while there are some new interested sellers looking to sell the particular commodity downwards. So yes, now if market is not buying and it is not ranging, then of course it is definitely in what we call the selling mode. Now in the selling mode, you're going to be noticing more of bearish momentum candles than the previous bullish candles or ranging candles. Now how do you understand, or how do you identify this shift in market structure? Now when market is buying, you are characterizing it with higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs and higher lows. Now the moment there is a break of structure and you notice markets begins to make move from a high to lower high, lower lows, lower high, lower lows. Now this could literally be referred to as a liquidity grab, where price literally came to test this initial price rejection zone and then starts to sell from that area. Now if you pay attention to this, you notice that okay, there's beginning to be more of bearish candles in this region compared to the previous candle market structure. Now what we will do is, for some reason, we could say we have some equal high liquidity around here, and looking like price has literally come to retest that same area at a discounted price and then closed below. Now what this is signifying is that it is possible that this trend might be shifting from a bullish momentum into a bearish momentum. Now we want to see a perfect break of structure, which we have here, but then of course this is the daily time frame. Such a break of structure is going to be very significant. So after this break of structure, maybe we want to wait for a pullback and retest of this significant high areas in order to trade the trend downwards towards lower prices. Now there are a whole lot of other concepts which you want to bind together when trying to pick your trades or perfect your positions and entry. But one of the most significant that I want you to add or include in your trading plan or your trading system is market momentum. Now try to identify what phase of the market are you, and then you move on to identify, okay, who are the dominant performers in that particular market or in that particular price chart. Now, just like we could see here, the predominant performance on this gold pair has literally been the bullish performance, and now for some reason we are starting to see a whole lot of interested bearish candles. Now, what this signifies is there is a possible indecision or shifting of bias. Now, we want to pay attention to the next candle that follows after this particular set structure. Now, because the next candle is actually going to give us some more in-depth understanding of what the market is looking to do in the nearest couple of days, couple of weeks, possibly. And now, as long as you're not a scalper, if you're a swing trader, a day trader, or probably a position trader, of course, you want to identify these setups on higher time frame in order to increase your profitability margin, your performance ratio, and your rewards potential. Okay, without saying too much, let's go a bit slower. This is the daily time frame, so I'm going to be going to the 4 hour time frame. Let's do a quick run through of what the 4 hour time frame looks like. It will be showing us now. Yes, 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 yes. Let me zoom out a bit. Now, zooming out a bit, just like we've been on the bullish on the higher time frame. Now, this is the 4 hour time frame. Now, what do we notice here? What we notice on the 4 hour time frame is that after this retest of demand zone here, price literally have been struggling to get to this region. It took it almost how long? Initially, notice the period it took for price to get to this high, and then all of a sudden it's taking price this long to get to that same area, which happens to also be acting as liquidity. Now, for some reason, we have seen engulfing candles, which signifies rejection of these higher prices at a discounted zone. Of course, there's a supply zone within this area, and price looks to be retesting it and closing above. Of course, there's a break of structure at this point, but not totally confirmed. Now, what do we want to see? We want to see price literally pull back to somewhere around this area, and then probably take on a short position or sell trades and into the downside. So yeah, if I was going to be paying attention to this, I would set up my trading somewhere like this. Excuse me, that was not it. Short position, short position. Okay, yeah. Now I would set up my trade like this, probably expecting price to pull back into this area and close below, riding all the way down, setting my stop loss above the high just in case price decides to weak, and then this leaves me at a 1 ratio 1 ratio 2 point something, yeah, 1 ratio 2.67. Okay, now so if I'm risking 1% on this particular trade, I should be looking to close a profitability of about 2.67%. So if I risk $1,000, I should be looking to take profit of about $2,670 thereabout. Now, this is one concept that I guarantee you is going to improve your trade performance, improve your profitability margin, your rewards risk to reward ratio, and also help you choose or pick better performing trades. Okay, without wasting too much of our time, I hope I've been able to simplify the concept of momentum as much as possible. I look forward to you including this to your trading system. And please, please, please be sure to leave a like and subscribe to the channel Wealth FX, Trading Made Easy. Please leave a comment in the comment section below, maybe subject you want us to talk about, or probably questions you probably have that I would always be looking forward to answer you. All right, guys. I hope to see you in our next video, and I hope this video blesses you. Stay blessed by the best. I remain your host, Mr. Babs, and have a beautiful